This is the Chappell Real Estate Show, episode number 16.
Welcome to the Chappell Real Estate Show, your source for the latest real estate information so you can buy, sell, and invest with the best in Texas. Whether you're a first-time buyer, a current homeowner, or a seasoned investor, you've come to the right place. We're here to simplify all things real estate so you can achieve your goals of property ownership with your hosts, Daniel and Roger Chappell.
Hey, what's up, everybody, and good morning. Thank you guys for tuning into the Chappell Real Estate Show, your source for the latest real estate information so that you can learn how to buy, sell, and invest with the best. I'm your host, Daniel Chappell, and today we have a really fun episode for you guys. So basically, my dad and I were sitting around yesterday and we were talking about what do we want to give our listeners this week with the Chappell Real Estate Show. And we started talking about some of the unique and honestly, bizarre situations that we've had come up in our transactions in the last couple of weeks. And we thought it'd be a good opportunity to, bring some insight to some of these odd situations that may be coming up in today's current market. Forbearances being one of those things, clouds on title that can slow down the closing process or sometimes bring it to a grinding halt. And then we're also going to touch on some of the latest statistics that were just released by the Austin Board of Realtors and talk about what has changed in the market from 2019, 2020, and 2021 as far as year to date. So that'll be really cool to see. And I hope you guys stay tuned, and we will see you guys on the other side of the episode. So before we get into the episode, I want to give you guys the Chappell chunk for the day. So today's Chappell chunk is going to be, if you plan to sell your home, open title before you do so. The reason I say you need to do that is because what title companies do is they search the title of the home for any discrepancies, any kind of what they would call clouds on title. So in opening title ahead of time, before your house actually gets on the market, what you're doing is you're finding out if there's any liens on the property or any kind of potential disputes that could halt the sale of the property. So that's going to be the Chappell chunk of the day. You'll get to hear some bizarre stories of why why this is beneficial to do. But that's going to be the Chappell chunk for today. Is if you're selling your house, be sure that you get with a title company, open title, and try to get ahead of the game to see if there's any kind of hiccups that may be able to be addressed prior to going on the market. Let's get right into the episode. All right, good morning, everybody, and thank you guys again for tuning into the show. So I'm going to be doing today's episode solo. So basically what we're going to be talking about is forbearances, and that is going to be the primary topic of the day, as well as the latest statistics of where we are year to date with our sales in terms of how many sales have been closed, how many homes are on the market versus 2019 and 2020. And it's going to be a lot of fun. So let's first talk about forbearances. So this is something that is very new to everybody. I've actually got a listing that I've been working on with a seller, and we just went through the title process and found an additional lien on the property due to the forbearance. So let's kind of back it up and we'll talk about what exactly is a forbearance. So for our listeners who are tuning in who maybe have heard the term over the last year or two, but aren't really super familiar with what exactly it means. So forbearance was a loan program that has been offered not only during COVID, but in general. Times of need, natural disaster is usually one of the most common situations in which a forbearance is going to be put into effect. But basically what a forbearance is it's an option that allows you to postpone your mortgage payments without being negatively reported on your credit. So what happened whenever forbearances came to be is a lot of people weren't really understanding what it meant or what the consequences of the forbearance were. So basically, and I was one of those people. I actually mentioned this on a previous episode. When COVID had just started ramping up. I want to say it was April of 2020. I logged in to make my mortgage payment, and I noticed that there was this forbearance. Hey, apply to skip your mortgage payment. Or is money a little bit tight? Do you want to, miss your mortgage payment free of charge? And so I actually quickly applied for it. And, I looked at it as I wasn't necessarily in need of the mortgage payment assistance, but I did look at it as an opportunity to take that additional funds that I would be putting towards my mortgage and put it towards other, higher interest debt and things of that nature. Well, I went to bed that night and I just kind of had a weird feeling about applying for that forbearance. So I woke up the next morning and I did a little bit of research and basically decided that it wasn't for me. I didn't find necessarily a lot of information that scared me away from it, but it was enough information that I was like, I don't think I need to do this. So I took my loan off of forbearance within 24 hours of applying for it, and I'm really glad I did, and I'll explain to you why. So what I came to learn when I took this listing is that when you put a loan into forbearance, it's a little bit more complicated than just taking your mortgage payments and delaying them, or taking your mortgage payments and putting them on the end of the loan. I wish it was that simple, but basically that's not really how it works. So what ended up happening is the mortgage company put an additional lien on the property because the mortgage company is still owed additional funds for this mortgage that that they've loaned you money for. So basically what that looks like is, say you skip 6 months worth of payments and you have, $15,000 that you now owe to the mortgage company. There's a couple of different forbearance programs available. Some of them require that after the forbearance period ends, you pay back the entire forbearance amount in one lump sum. So that's one way that it happens. And in most cases, if you applied for forbearance, you're probably not in a position where you're going to be able to make those kinds of large payments, right? $15,000 at once is not very conducive if you're talking about, you delayed your mortgage payment because you couldn't afford to make it in the first place. So that's not, the most ideal situation. There is another situation where they will take those loan payments that you missed and they'll put them onto the back side of the loan. But when they do that, they are actually entirely restructuring the loan. So in doing that, there's a process that goes along with it. Just like when you buy your home or when you refinance or anything like that, it goes through an underwriting process. So the trouble is that banks aren't set up to do these massive amounts of paperwork and massive amounts of underwritings and massive amounts of loans restructuring in a short period of time. And that's exactly what's happened. Is we have over 3 million Americans at one time that applied for forbearance, and I think the number now is still above, I think, 2.2 million Americans that have their loans in forbearance. And we're coming right up on when these programs are going to expire. I believe it's 15 months. So through the end of June, homeowners can still apply for forbearance and can still get forbearance. So knowing that, and knowing that we're coming up on the end of this, some people are starting to reactivate their mortgage payments. They've either already started making mortgage payments or are wanting to begin starting to make mortgage payments. So what that means is now the forbearance has ended and they're going to send additional paperwork for signatures of the owner. And what that does is that allows them to then restructure the loan. And in doing that, it creates this massive backlog for the banks. So, I started doing some research because I wasn't sure how accurate what this bank was telling me was. So I started doing my own research and basically came to find out that as a seller, you technically speaking can sell your home while it's in forbearance. Where it becomes an issue is when your loan is being restructured in such a way, it means that you have to allow that restructuring to be completed before the lien can then be released from the property. So, what is a lien? So basically what a lien is when you buy your home and you take out a mortgage on it, that lien is the amount that you owe on the principal balance of that mortgage payment. There's a lien on the property for that amount of money. In addition to that, because of the loan restructuring, there's now a second lien on the property for the amount that was forbeared. And what that does is it then has to be restructured into a new loan, and this giant backlog of other homeowners that have been put into forbearance are also going through that same underwriting process. And the bank that, I'm not going to name any names, but the bank that my seller's mortgage payments goes through had this exact issue. And now we're looking at, a month to 2 month delay because this particular bank has a 1 to 2 month backlog of loans and forbearance that are being restructured and are in the underwriting process. So basically, if you are a homeowner and you have your loan on forbearance and you are considering selling your home, you need to contact your mortgage company and you need to find out what kind of forbearance plan you were on, what are your repayment options, how long does that process take. So if they tell you that your mortgage payments are being moved to the end of the loan and you're looking at selling in the next 2 to 3 months, well, you need to do a little bit of thinking and put your head together with your bank and figure out what's the best way to be able to make that happen. And if it has to go through an underwriting process, then you can just about assume that it's going to be a little bit of a delay. So that was that's one of the bizarre situations that our team has encountered in the last few weeks. And it's something that I wanted to make sure that all of our listeners were aware of, because it is such an uncommon situation, but it's about to become a lot more common. So, we wanted that information out there. We want people to understand that this process is not all that it seems, and information can be a little bit misleading. So as I mentioned, be sure as the seller that you get with your title company, you get with your mortgage company, and you find out what your options are if you have a loan in forbearance, to be able to get your home sold as quickly as possible with as minimal headaches as possible. So another kind of unique situation that popped up that relates to clouds on title is we had my dad, Roger, actually had a plot of land that was under contract. And we found out that there had been a buyer previously. So this lot was on the market for, I couldn't even tell you how long, and it had been under contract with the previous buyer. Well, the buyer at some point basically decided that they wanted to back out of the contract, but they had no legal basis to do that. They were out of option period. They had been through the financing period. So, they tried to back out of the contract, and rightfully so, the seller of the land wanted to keep the earnest money. So when he kept the earnest money, the original buyers that had this property under contract decided that they wanted to file a lawsuit. And in doing that, they tied up that property. So what they claimed in the lawsuit is that they were suing mainly because they felt that the property had been misrepresented, that there was an easement that ran through the property that prevented it from being able to be built on. And they claimed that was the reason why they were doing the lawsuit. It's up for debate. It could be misconstrued that the buyers were upset that they didn't get their earnest money back because they were in breach of contract, and then tried to get their money back by filing a lawsuit. Well, the trouble with that is that the buyer was in breach of contract. And not only that, but the easement that had run through the property did not prevent the property from being built on at all. So the basis of the lawsuit was false. But, that's basically what was going on. So fast forward, my dad, Roger, is working with a client who is interested in this piece of land, and they go and they get the property under contract. Well, it wasn't until after the new buyer had this land under contract that this lawsuit was filed and then attached to that particular property. And in doing that, that created what they call a cloud on the title. So Basically, a bunch of different attorneys had to get involved with the situation to determine if that lawsuit needed to be attached to that particular property or not. And basically, it was determined that it didn't need to. That easement ran off of another property, another subject property that was much larger, and I believe was no longer in need of the easement. All right, so now I want to go ahead and get into some of the really cool, interesting, and fun statistics that the Austin Board of Realtors recently released. So let me go ahead and get my trusty phone here. So to kind of give you guys some reference, I'm going to go through stats for 2019, and I'm going to go through each individual stat and hit it for 2019, 2020, and 2021 so that you can have all those numbers as fresh in your mind as possible and try to get an understanding of how quickly this market is changing. So 2019, pre-COVID, the average sale price in the Austin and Round Rock MSA area was $305,000. So the average home was $305,000. In 2020, that median sales price went up to $335,000. So it went up $30,000. And that's for 2020. Mind you, this is when we did see COVID start to ramp up, was in March of 2020. So this is when things really started to shift, right? Well, in 2021, this year, the median sales price has gone up nearly $100,000. So it went from $335,000 to now $425,000 is the median sales price. So the increase from year to year, $305,000 in 2019 was only 1% up from 2018. In 2020, it went up 11%, and in 2021, it went up 28%. 28% are the rising home values in the Austin area compared from March of 2019 to March of 2021. Another incredibly shocking number is the amount of time that homes are spending on the market. So in 2019, the average home was sitting on the market for 64 days. In 2020, it was 54 days, so a decline. And in 2021, it is 26 days. 26 days. That is half of the amount of time as it was last year. So what does that tell us about the market? Well, it tells us that inventory is remarkably low. It means that every home on the market is going to sell in less than 2 weeks. 2 weeks. Crazy. So again, to give you a little bit more perspective on what that means, in 2019, the average months of inventory, and we talked about this in a previous episode. What is months of inventory? Well, months of inventory is a metric that we use to determine how long will it take for the properties that are available on the market today to completely sell out. So just to kind of give you an idea, 6 months, 3 to 6 months of inventory is what you call a neutral market. That means that there's a good amount of supply, there's a good amount of demand, and that means that sellers are getting pretty close to their top dollar. And I'll kind of give you a little bit of a for instance. So in March 2019, there was 2.4 months of inventory. So that would actually still be considered a seller's market. And we saw back in 2019 that most homes were getting around 96 to 98% of their list price. So if you had a house that was listed at $300,000, 98% of that list price would be $294,000, right? So basically, what we saw back in 2019 was that sellers were able to put their homes on the market. They were able to get them sold in a reasonable amount of time and for pretty close to the list price. In 2020, we saw a little bit of a shift. We saw 99 to 100% of homes were selling for 99 to 100% of their list price. So that, was an even stronger seller's market. So that in 2020, it went from 2.4 months of inventory in 2019 to 1.6 months of inventory in 2020. So lower inventory means lower supply. Typically, that translates to higher demand, and things start to move very quickly. So again, this was right at in March of 2020 when COVID was ramping up. Well, today, in today's current market in the Austin area, there is 0.4 months of inventory. Went from 1.6 to 0.4 months of inventory. So what that means is that this is considered an incredibly strong seller's market. An incredibly strong seller's market. So as I mentioned, 3 to 6 months is what's considered to be a neutral market of inventory. Under 3 months is considered a seller's market. Above 6 months is when things start to shift downward in terms of pricing, and that's what we call a buyer's market. So we've mentioned this again before in previous episodes, but we haven't seen a buyer's market in the Austin area at least since I've been licensed. In the last 3 years, it has been a very strong seller's market. All right, another interesting statistic that we've seen is the total dollar volume of single-family properties sold. So in 2019, that was $1.1 billion in single-family inventory sold. In 2020, it was 1.27, so from 1.1 to 1.27 billion, which is up 11%, to this year up another 51% to 1.99 billion. So that just relates right back to that median sales price. When the sales price goes up so drastically, $90,000 over the course of 1 year, that obviously puts a huge impact on the sales dollar volume of this market. So 1.99 billion homes, single family residential homes sold in up through March this year. So that is just crazy, guys. The numbers that we're seeing now are just astronomical. And, we're going to continue to update all of our listeners with the latest information simply because it is changing so rapidly. It's only been a couple of weeks since we released our Austin Happenings episode. And I'll tell you, the amount of stuff that we've seen in just that few weeks that has changed the dynamic that's playing out in the market today. We've had several listings over the last month or so, and in having all those listings, we've gotten a lot of insight on what buyers agents and what buyers are willing to do to win offers. And I'll tell you, it is madness. So stay tuned. We're really excited to have you guys. I want to thank you all again for tuning into the Chappell Real Estate Show. I know it was a bit of a short episode, but we wanted to make sure we brought this information to your attention. And please, if you have any additional questions, especially as they relate to forbearance or some of the statistics that we've talked about, or if you have kind of a unique situation on your own that you're not sure how to handle, feel free to give us a call. We would love to assist you guys. Again, referrals. We run our business by referral, and that goes both ways. So, if you have somebody that you need to be put in contact with, please reach out to us. Even better, if you have somebody who's looking to buy, sell, move, looking for advice, give us a shout. We would love to connect them with an agent in their area, or even better, be able to assist them ourselves if they're coming down here to Central Texas. So thank you guys again for tuning into the episode, and we will see y'all next week. Have a great day.
Thank you for joining us this week on the Chappell Real Estate Show. If you enjoyed this episode, share it with a friend and leave us a review. Find us on social media at Chappell Realty Group and online at chappellrealtygroup.com. Until next time.